Hello everyone, here are the latest market news on June the 10th, 2019. Mexican peso jumps on US-Mexico deal. The Mexican peso jumped against the dollar on Monday after the United States and Mexico struck a migration deal late last week to avert a tariff war, provided some much-needed relief to fragile market sentiment. Over the past year, trade disputes between the United States and its trading partners, including a long-running conflict with China, have slowed global growth and unsettled financial markets. U.S. President Donald Trump had threatened to impose 5% import tariffs on all Mexican goods starting on Monday if Mexico did not commit to do more to tighten its borders. The Mexican peso rose 2% to 19.2275 pesos per dollar after trading resumed for the first time after Mexico agreed on Friday to expand along the entire border, a program that sends migrants seeking asylum in the United States to Mexico. Oil rises on supply cuts. Oil prices rose on Monday after Saudi Arabia said producer club OPEC and Russia should restrict supplies to current levels, while Washington's withdrawal of a tariff threat against Mexico removed a cloud of the global economy. However, traders said concern about the health of the global economy and the impact on fuel demand were still weighing on oil market sentiment. Brent crude futures were up 32 cents at $63.61. WTI crude futures gained 33 cents at $54.32 per barrel. Traders said crude prices were rising following statements by OPEC's biggest producer, Saudi Arabia, on Friday that the group was close to agreeing extended supply cuts. The OPEC and some non-members, including Russia, known collectively as OPEC Plus, have withheld supplies since the start of the year to prop up prices. European shares gain on Mexico tariff relief. European shares rose on Monday as strong export data out of China and the region of a deal between the United States and Mexico provided some relief to markets worried by the impact of President Donald Trump's aggressive trade bargaining. Helping the European auto sector were signs that Fiat Chrysler Automobiles NV and Renault SA were looking for ways to resuscitate their collapsed merger plan and secure the approval of Nissan Motor Co. The pan-regional Stoxx 600 index rose 0.3%, with Britain's FTSE 100 up 0.43%. However, trading volumes were thin, with markets in Germany, Switzerland, Austria, and most Nordic countries closed for Whit Monday. Shares of tariff-sensitive automakers and their suppliers rose 0.596% on the news of Trump's retreat on last month's shock threat of a 5% import tariff on all Mexican goods in exchange for moves of immigration. Bank of Japan can deliver more monetary stimulus. The Bank of Japan can deliver more big monetary stimulus if necessary, but needs to take care with its side effects of the financial system, said Governor Haruhiko Kuroda. The BOJ will ease further in momentum toward its 2% inflation target is lost, Kuroda said in an interview with Bloomberg TV in Fukuoka, Japan, where central bankers and finance chiefs from the Group of 20 met over the weekend. The governor emphasized that the BOJ doesn't need to act now, citing the health of the economy. Kuroda's comments come after Federal Reserve Chairman Jerome Powell signaled a willingness to act if the economy needs it. European Central Bank President Mario Draghi vowed to support growth, and People's Bank of China Governor Yi Gang told Bloomberg in a separate interview that he has tremendous policy options to stoke demand. Like Mario Draghi, I think we can do these things if necessary, Kuroda said.